Folks, I want to talk about two short squeeze opportunities. Today, I want to talk about the short squeeze and offer a few stocks that are showing extremely heavy short interest and maybe getting for a massive rally. Before I go too deep, let's start off with a few explanations. A short squeeze occurs when a stock or other asset jumps sharply higher, forcing traders who had a bet on its price would fall to buy it in order to forestall even greater losses. Their scramble to buy only adds to the upwards pressure on the stock's price. How does it all work? Well, short sellers borrow shares of an asset that they believe will drop in price in order to buy them after they fall. If they're right, they return the shares and pocket the difference between the price when they initiated the short and the actual sale price. If they're wrong, they're forced to buy at a higher price and pay the difference between the price they set and its sale price. The flight of short sellers and their impact on the stock's price is known as a short squeeze. Now, short sellers are being squeezed out of their positions, usually at a loss. Short sellers zero in on stocks they think are overvalued by the market. For example, to give you a really good example, Tesla captured the enthusiasm of many investors with its innovative approach to producing and marketing electronic cars. Investors bet heavily on its potential. Short sellers bet heavily on its failure. In early 2020, Tesla was the most shorted stock in the US exchange with more than 18% of its outstanding stock in short position. In late 2019 through early 2020, Tesla stock soared by 400%. Short sellers, well, they got hammered, collectively losing about $8 billion. In early March of 2020, Tesla stock finally fell along with its most other stocks in that category and in that sector during the market downturn. Short sellers made about $50 billion in a sell-off that lasted a few days. Today, I want to take a look at a few stocks that have a growing number of traders taking a short position on the stock, which increases the odds that a short squeeze will happen and cause the price of the stock to skyrocket. The first stock on my list is NIO, with ticker symbol, you guessed it, NIO. If you're not familiar with NIO, it's described as the Tesla of China. Chinese premium electric vehicle maker NIO also doubles as one of the most heavily shorted stocks in the market, with roughly 18% short interest. Throughout 2019, this company struggled to sell premium electric vehicles because the premium electric vehicle market in China, well, frankly, it's very small. These struggles will persist in 2020, and NIO will continue to burn cash at a rapid rate. But something new happened recently. NIO is launching a new car, which is supercharging Chinese electric vehicle market demand. As such, I'm seeing better numbers and demand for NIO cars, which will undoubtedly cause a short squeeze, especially with such heavy number of traders holding short shares at this time. The second stock on my list, and one that I'm really super excited about, is Match.com. Ticker symbol is MTCH. The company provides online dating, offers subscription-based online dating websites and application services. The company's dating products consists of Match, Occupid, Tinder, Plenty of Fish, Meeting, Tuo, Our Time, and others. The stock had a whopping 68% short interest, making it the second short interest stock on our list, only below Carnival cruise ships. As clearly, investors believe the online dating company is due for a big downturn. Though its portfolio of dating apps and platforms, Match has created a monopoly of sorts in the online dating world. That industry is only rising in usage and popularity as consumers increasingly digitize their experience. Further, thanks to its dominant position in the online dating industry, Match operates at really sky-high margins, which will allow for big revenue growth to translate into big profit growth. In other words, with Match, you have the leader in growth market and big margins. That's a recipe for success, especially considering that the valuation isn't terribly stretched at 37 times forward earnings. Over the next few quarters, the numbers at Match will remain strong. The shorts will remain wrong, and a short squeeze will likely materialize, and the Match stock will run higher. Now, here's what I really like about Match. The company came out with quarterly earnings of 46 cents per share, beating consensus estimates of 41 cents per share. This quarterly report represents an earnings surprise of 12.20%. A quarter ago, it was expected that this online dating company would post earnings of 50 cents per share when it actually produced earnings of 51 cents per share, delivering a surprise of 2%. Over the last 4 quarters, the company has surpassed consensus EPS estimates 4 times. The stock posted revenue of $544.64 million for the quarter ending March 2020, which is in line with expectations. This compares to a year ago revenue of $464.63 million. The company has topped consensus revenue estimates 2 times over the last 4 quarters. Technically, well, let me tell you, the stock began trading higher in recent days, bouncing from lows of $45 last month and now trading close to a 52-week high of $86 per share. I believe short sellers will begin covering their position as the word gets out, or as the world gets out of the corona pandemic mode, and the price of the stock will continue rising, especially once we see close to 70% short sellers closing out their position in coming months. I hope that helps.